Well, g'day there everybody right around the world. Thanks a lot for joining me on this Thursday afternoon market recap. I do have quite a bit to talk to you about in terms of some recent advancements in the construction of the daily time frame, especially relevant to the market indices. A lot of what we've been speaking about over the past week or so has been, of course, the golden key. And essentially what we've been talking about is that really the Dow Jones and the S&P 500 have been very close to breaking out, as you can see on my screen. However, we have been waiting for the Nasdaq to confirm the other two previous markets. So as you can see on my screen, the Dow Jones Industrial Average today, we closed down 24 points. What makes this interesting is that yesterday we do have that of a very brief, a very miniature sort of shooting star candlestick, and today it was the first sort of bearish activity that we have seen in the financial markets, or at least for the Dow Jones Industrial Average, since I believe the 6th of December, so a couple of weeks ago. So this is quite interesting. The same is true for the S&P 500. Pay attention to my screen. It was really on Tuesday where we started to interact with this 2,669 trigger. Again, we got above it intraday on Wednesday, but today we closed down 7 points. You can see that we are seeing again and respecting, of course, that upper resistance area. Now, this is integral because really the way we've broken down the markets over the past couple of weeks or so has really been contingent and of course reliant upon that of the Nasdaq. So as you can see, we've got a couple of different candlesticks over the past maybe 3 weeks worth of trade. We've got two consecutive or two major long day bearish Morobozu candlesticks mixed with another high wave spinning top and an inverse sort of shooting star candlestick over here. We've been a little bit suspicious of this move to the upside, and it has been, of course, again, that contingency before we feel comfortable either adding to our existing diamond positions or either and including our SPY position. So you can see for yourself that the Nasdaq, it hasn't actually flinched above or really got close to our 6,921 breakout entry. You can see again a very similar type of candlestick yesterday. It is what we call a little spinning top sort of doji candlestick, but it does have that upper wick, which is reflective of that of a shooting star, although it is not a definitive shooting star. Again, we have a little bearish candlestick today. This is not a major reversal sort of warning signal that we're seeing, but at least we are seeing a little bit of selling pressure and respectful, diligent sort of selling pressure up and around these most recent resistance swing highs. So if you've applied this analysis technique to that of the industrial average, you are not in at 24,594. I congratulate you for that. And on top of that, you are not in the SPYs if you had the contingent open anywhere near 2,669 because, of course, the Nasdaq hasn't triggered to the upside. Now, as I say this, however, we are still seeing mixed signals in our tech companies. However, a lot of our individual trades have continued, which is what I'll update you on at this particular juncture. And we're also seeing some very compelling signals on other individual stocks at different locations, which again, we'll get to in due course. But you can see for yourself on Apple again today, we have another spinning top type of candlestick. Not a whole lot that I can really update you on. Amazon today, we closed up $12, but rather inconsequential because we are still between that support area and that upper resistance area. So we do not have a definitive break to the upside, nor do we have a definitive break to the downside. However, if I fast forward and continue into the analysis of Boeing Airlines, this has just been one of our favorite stocks over the past number of weeks. Original entry 267, re-entry 279. Not only did we see a major gap up on, it was Tuesday, we saw a continuation on Wednesday, and of course another continuation today. We were up a further $2.16. Actually, the intraday high is printing at $296.82. So we are very close to that $299.25 target that we have, just shy of $300, that psychological round number. You have a decision to make. You can either place a sell stop just here below the low of Thursday's candle, just to, of course, guarantee and lock in those profits. Otherwise, you can keep it a little bit looser below potentially this little open gap here between Monday and Tuesday's session. But at the same time, we are very close to running another very, very, very profitable trade on Boeing Airlines. And for that, I congratulate you. Now, continuing on into Baidu, you can see today we have a little hammer at support. So this is a signal that I'm going to be speaking about more over the weekend. So pay attention to that. Now, yesterday on Caterpillar, a major bullish move. If I move my chart over to the left-hand side, you can see We closed up $5.32 yesterday. Today we did pull on back down a little bit, down $2.28, but this is all, of course, continuing from the breakout trigger at 140.80 and then the secondary entry at 143.53. We're printing at 146.46. So another very impressive trade, so to speak, on Caterpillar. This is a little bit of a slowdown. I wouldn't look all too much into it. It is not that of what we call or define as a tweezer top. This is just, again, the intraday sort of ebbs and flows of the market having, of course, its bearing on that of Caterpillar when we speak about and reference the Dow Jones Industrial Average. So a very nice trade there as well. We've got COP, which is continuing to the upside. We were up another 75 cents today. It looks as though we're starting to close above these upper wicks, which is fantastic. My target is still sitting here at 54.41. So we're doing pretty good on that particular trade. CVX, it hasn't moved, but we're still holding that support area, which is fantastic. Google is trying, of course, to grind its way higher. We're pretty much back at that break-even point, 1,066. Here we are at 1,058, but we don't have that definitive breakout above 1,081 yet. I wouldn't be looking to jump into Google bullish or bearish at this particular point, not until the Nasdaq breaks above its respective resistance area, which I touched on earlier in this Thursday afternoon market recap. Again, Goldman Sachs, I'm personally not in this. I didn't have it open. We were down here at the beginning of the week. We were printing at 250. It was on Tuesday where we went parabolic, but again, we've got a couple, or at least one shooting star candle on Wednesday, another spinning top today. If we see another candlestick during Friday's session, which is more or less within the sort of upper and lower wick, or all of the sort of intraday activity which took place today, well then I can consider this to be that of a stair-step continuation pattern, and I'll move and adjust my bullish and bearish entries accordingly over the weekend in that pro analysis class. Yesterday I updated, 2 days ago I updated you on IBM. We hit our target at 157.73. This was the first of two targets. All right, so we entered or potentially exited out of a portion, if not all of the position on IBM. We have pulled back, but we are still holding the support area. So again, I'm still under the impression that we are ultimately going to break above 157.73. It was great that we actually hit our target. What day was this? I believe it was Tuesday actually, and it was Tuesday. But just allow this again, a little bit of fluff, so to speak, a little bit of momentum, or a little bit of noise, market noise back and forth. But in due course, we should come back up to 160. I'm pretty confident and happy in this trade. It has been a very profitable trade from 152 and 152.68 up to 157, where the first target was hit on Tuesday. Continuing on, this is where it gets interesting. Netflix is going through potentially the back test of the neckline. We don't have a definitive answer yet, but we do have a marginal sort of upper wick during today's candle construction. And most importantly, or more importantly, more pertinent, is that of Tesla at the moment, because we've rallied back up into this pivot at 340. This is exactly where I'm expecting Tesla to rally up into. It has done that, and then to begin throwing off reversal signals. We do not have elevated volume at this particular point, but we do have a shooting star candlestick as at the close on Thursday. This is in combination with that of a little short-term, little spinning top, which happened on Wednesday. So pay attention to Tesla. We don't have a bidirectional trade, so to speak. We don't have a bullish trade above what appears to be the beginning or the construct of sort of upper resistance areas, nor do we have any true reversal signals that we're looking for this to actually roll at this particular time. It is going to need a couple more candlesticks around this pivot up here, around that 340, 335 pivot, before we're going to have a very, very nice, again, bidirectional trade setup on Tesla. Now, obviously, the US dollar has pulled back. That's fine. I'm still happy with the trade itself. It is back to more or less break even, but what appears to be the case at the moment is that we have just printed in a little higher, albeit relatively minor, higher high, and we're still holding the support area over here. On top of that, we still have silver and both gold that have broken down most recently. However, we did see a short-term pop off from this support area, so nothing, I guess, out of the blue. We were sort of expecting this, and again, even during today's session worth of trade, we were down 14 cents, which is taking us back into about the midpoint of where most of those gains were established during Wednesday's session. So I'm not all that concerned about silver or GLD at this particular point. Potentially, he took some profits already on SLV. For gold, it is a little bit different of a picture or a story. We're not down at 116.44, but we are still below that 119.99 entry. We still have this open window. We can still close this window, of course, but pay attention what happens around this pivot if we get up to it. And also on top of that, pay attention to these declining exponential moving averages. So I'm still confident because, again, the underlying trend direction of the US dollar index appears to be shifting from that of a macro bearish trend for the majority of 2017 into the beginning of, a major advance, which is going to take us into 2018. And that is obviously going to have significant headwinds for the commodities markets as well. So that will do us for the Thursday afternoon market recap. Again, I'm very proud of you if you chose to listen to, again, essentially, or the analogy of the golden key, so to speak, or what will be the market truth between all three markets. We still do not have confirmation with the Nasdaq, nor are we seeing any of these major tech companies rally to the upside. However, we are seeing some grassroots, so to speak, or some healthy signals in some of the stocks, but not all of them. So it's going to be very interesting to see how the markets close tomorrow. And then again, I look forward to bringing you that pro analysis class on Saturday. If you have any questions, please email me. Until next time, I'll see you all. Enjoy your evening. It's James signing off on behalf of Pivot Point Trading. Goodbye.